Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are on Friday, the end of a quarter, the end of the month, September 30th, 2011, getting on to about 2:40 in the afternoon. And it's been one pressure-filled day for the stock market. No news gets this market going. Had a good Chicago series of numbers. Manufacturing and the like didn't help the market at all. So you're just laying down. I don't see in the last 20 minutes why we'd get one of these dramatic 15-minute moves. It could happen, but I'm not seeing it. And the market's getting weaker rather than stronger going into the weekend. You're getting some buying in the Treasury instruments as people want some protection, and that happened in the gold market. So it's the risk-off trade. That's what you call this. People don't want to own the stocks. They really don't want commodities. They've been selling the copper off at a pretty good clip here. The silver is sold off, and the gold just can't get itself going. You'll see where gold stopped. I could have pinpointed this one. I feel pretty good about it if you get my twice daily newsletter. And the gold and the dollar's getting bought. So that to me is people looking to not put on risk. They want protection. Let's look at the gold chart, and you can see it's been a terrible September for the gold bulls. You made a new contract high, and you not only lost it at one point, you almost lost $400 from that. Now, the question in gold from the bullish perspective is the selling that had to be done? In other words, the people that got panicked and sold out, or those that bought too high, did they get knocked out? What's going to go on? All I can tell you is I think the market is trying to build a base, but you won't know it until after the fact. And I think it's caught in a base right now from up here to down here. I can label that real easy, from 1679.20 to 1535. And if the market can stay this way today, maybe the 1585 zone is going to prove itself of some worth. We'll find out probably by the close of business today. I've drawn this red line. And the reason I've drawn it, that is July's close, 1621.70. Everything since then, all of August and September, has been noise in the market. You're back to exactly the closing price. I swear to you, you're within a dollar of it right now from the end of July. And this is that number that I like because I look at the end of July and then I try to project from there what could happen by the end of December. I consider peaks and valleys interesting, but I'm still looking from July to the end of December. And typically over the past, 10 years or so, the market has shown gains with the exception of 2008. Now, I don't think this year would be different than 2008 if all the financial markets let go to the downside. Something you've got to understand. There's always a risk with every type of market, and situations in the past do change going forward. I wish I could tell you everything is identical. I've circled 1679.20 because that's the last rally high. It doesn't mean that today's high won't become an important high at 642.50. It could. All you got to do is take out today's lows on Monday. But you've got a distinctive pattern of lower highs all the way through, and it may even end up with that one. What you also have for the first time is a pattern of getting higher lows. So the market is driving down one way, and it's trying to resolve itself on the other way. It's called a chart pattern. And I want to show you something. I put together 12 typical chart patterns as a free offering for you. It goes in our futures trading kit. We just added it today. This is something that I did years ago. People wanted to know, talk to me about the different chart patterns, descending triangles, fan lines, what do they do? Give me an idea of how they try to resolve. So we take these, we put them on the chart, and we give you an idea about it. It's part of the futures trading kit. It's something cool that you can put right on your desk, and as you're looking at a chart, try to figure out what the current pattern is of the market, and you take it the next step. It is free. You call us at 1-866-973-2077. My staff will take it the rest of the way. Or go to our website, www.iraepstein.com, and sign up for our futures trading kit. You'll get it in either direction. If it's over the weekend, you want it, don't worry if you're going to call. Just leave your name and number. We'll get back to you on Monday morning. Okay. So, in continuing with gold, the reason I said today I was going to make the argument as to running into the brick wall is that's the 100-day average of closing prices. So the market is trying to figure out what to do there. What else happened today? Look at the red line. It has crossed under the blue one. It's called a crossover. And you haven't had one of these in a long time. Back in the beginning of July, you had one that was bullish. Now that's a bearish crossover. You heard me, bearish. And it's because the shorter term average has gotten under the medium term. So it's going to drop down to offer another level of what? On way up, resistance into the marketplace. So this market's starting to build resistance. If you were to ask me right now if the gold did rally, where would it have its next real problem? If it can get decisively through that 100-day average, which I don't think it's going to do today in any manner, I would say then 1750 area roughly, but that number is going to fall each day, so it's going to get a little bit lower as we go forward. What the market has successfully done is it got under the Bollinger Band, these black lines that you see here, and it's just flipped to the other side. That's not bullish. That's still a bearish category. So you're going to say to me, why am I still longer term thinking the bull market when all the indicators are down? It's because of what's going on that broke gold. That long-term, from the fundamental point of view, I'm bullish. The situation in Europe has not gone away. It has not been resolved. They keep talking they're going to do something, but we don't have all 17 countries in. And when they agree to this fund, the next morning, you're going to see that the fund's not big enough. We already know that. So they've got to figure a way to get trillions of dollars, of euros, into some fund where they can really plug the problem. The problem with the European Central Bank is it acts like a tortoise, not a hare. That's not good. The second problem is the U.S. Are we going into a double-dip recession? Has anybody really noticed that jobs are not improving? We're not building new homes. We've just gone through a summer. It's another year of the same, any way that you want to cut it. Have you not noticed that while the press tried to make a big hurrah, that the government didn't have to shut down because we were able to get a bill through Congress, so to speak, for 4 days of financing? Does this sound to you like anything good is getting done? There's a lot wrong here, not good. And the question is, will the gold eventually respond to it and say, hey, I need that as the storage of value again, the way that it did 3-4 months ago? That's what you have to wait and see. Market has got a stochastic study that's oversold. This is that 16, this is the low that I'm showing you from the last, not 1600s, but this was the top of a ridge that was built in June and July, and when the market popped over it, it ran to the upside. All the market came down and did now is go back to an old support zone. This is silver. Silver still looks as bad as it did before. It too has gotten itself over the Bollinger Band, but just like the gold market, you'd have to take out 33.58.5 to turn up. Yes, you have higher lows, and you've got a pattern of lower highs. You're narrowing into a triangle, and that's not necessarily bullish at all. Same in the copper market. Still looking sick as can be. Could easily go down to the $3 level to challenge those lows real fast. So I don't see anything that's real bullish here. Here's the cotton market. Remember I told you it's going to cover some other commodities for you. First thing my eye goes to is the embedded stochastic, which means the rally yesterday was a bull trap. As long as that number, that red and brown, stay under 20, that sideways action, I think the market will go down, take out yesterday's lows, and potentially go down to the 95 level, the Bollinger Band bottom. This is the gasoline market. Oh, I'm sorry, this is Brent. I'm looking at the symbol here. I'm looking at the price, too. And that's Brent crude. And you can see, when you got under the Bollinger Band, all you did is flip on the other side, and you're still staying down. So this is good for the economy in its own way while it's a bear market, because, in effect, it's a tax that comes off people around the world. Here's the corn market. Last night I wrote in my report, and I tried to warn people. I said, you don't go into the end of September grain supply report. It is where big adjustments can be made in ending supplies, which then the industry takes and they try to project where you're going to be as harvest is coming in. It also impacts wheat quite a bit at this time of the year. Well, your corn's down the limit today, 40 cents. And this has been a market that has just completely let go. You're looking at a market that was 770 going into the month. And the market is finishing the market the month out at 594. There's a positive side to this too. Here's the hog market. Hogs are not lost on this. Hogs need to eat. They have to eat, be it a corn, be it a wheat supplement with it. It's going to be something like that. And now that grain has gotten cheaper, the market stood back, watched what was going on. This is called a stochastic study right here that has gone sideways. This is the Bollinger Bands that have gone sideways, and the market is now pushed out the top band. This is bullish until you take out now 81, 87, and this market's got the potential to run back into the 90s. Maybe we've cut the herds down too much in a lot of these meat markets. As you can see, you're not getting any bounce in the stock market going into the close. Looks to me like in the final minutes going to get very ugly here. Something I'd be watching. In any case, you all have a good weekend. And I'm Ira Epstein. I'll see you on Monday.